Many financial experts believe that we are on the verge of a massive economic downturn, and Elon Musk thinks that the housing market will play an extremely substantial role in this. Stick around to the end of this video as we dive into Elon's thoughts about why he has such a negative outlook on the housing market. Imagine that your house's worth is going to be halved in the next several months. Worse even, suppose they informed you that you were on the edge of losing your home entirely. Now, I'm certain that the vast majority of us would be in a state of complete fear. In any case, this is precisely what Elon Musk did when he recently warned his more than 95 million followers on Twitter to ready themselves for a housing disaster that would be so huge that it would be one of the primary characteristics of the forthcoming economic downturn. The stunning tweet that Elon Musk sent out was a response to a post that Dogecoin's co-founder Billy Marcus had sent out, in which he claimed that the most recent global recession was caused by predatory lending methods and other reckless characteristics. Marcus tweeted on the 14th of May the following: "Cryptocurrency was created as a statement against central bank control, right after the 2006 recession caused by predatory lending practices and other irresponsible nonsense, leading to the housing bubble bursting, rampant printing of money, bailouts, etc." Musk afterward tweeted, "The axiomatic error was that housing prices only go up. I don't support predatory lending, but many of those lenders were severely wounded or didn't survive. They dug their own graves, a lesson we should all take to heart, including me." In order for us to fully grasp what Elon Musk and Marcus are referring to, we need to turn back time to the start of the housing bubble in 2006, which occurred 2 years before the onset of the Great Recession. There were numerous predatory lending practices and so-called innovative products like subprime loans in circulation at that time. Although these financing packages were extremely risky, even the average American was able to obtain one, resulting in a mortgage lending frenzy. A housing bubble was formed as a result of this, which stopped in early 2006 before commencing a steady drop later that year into 2007 and eventually crashing to record lows in 2008. Because so many of these individuals couldn't afford to repay their loans, there were numerous defaults and foreclosures. The iconic Great Recession that began in 2008 was started by this surge of home foreclosures. With growing inflation presently roiling the US economy, might another housing market crash be imminent? Musk expects this to be the case, even though the prices of homes today are much higher than they were in 2006. While many financial experts believe that we are on the verge of a complete collapse, many also believe that we are more likely to see a short-term correction. During the previous crisis, developers overbuilt homes in an effort to fulfill the increased demand of prospective purchasers who were unable to afford their mortgages. Demand in 2006 was driven by variable lending procedures, as opposed to today's demand, which is far more legitimate due to an increase in interest in housing sparked by the COVID pandemic. For this reason, housing shortages in many locations of the United States are presently driving up home costs. On the other hand, a group of researchers and economists working for the Dallas branch of the Federal Reserve Bank are concerned that we may already be witnessing the beginning stages of a housing bubble right now. They have, however, cautioned that this might not be like the housing bubble that preceded the Great Recession in 2008. Researchers from the Federal Reserve Bank said the following in a blog post that was released in the month of March this year. However, there is growing concern that US housing prices are again becoming unhinged from fundamentals. According to their findings, exuberance is the catalyst for the current market bubble. As a result, the price of homes is rising because people are spending a fortune on expensive, over-the-top properties. This method can have detrimental ripple effects on the market, including altered investment patterns, misallocation of economic resources, and individual bankruptcies. In addition to this, it is also capable of having a variety of far-reaching macroeconomic consequences on employment. They further claim that this alleged bubble can lead people to believe that prices will grow in the future. For fear of missing out, purchasers would rush to acquire homes if they believe that prices would indeed rise. This peculiar occurrence might push up home values and increase buyers' expectations for future profit gains when selling their homes. However, it is important to keep in mind that real estate tends to respond considerably more slowly to rising interest rates and an uncertain economy. This is because a house purchase or sale is a lengthy process in comparison to, for example, purchasing stocks or vehicles such as automobiles. On a fascinating point, this is not the first instance that Musk has had a pessimistic forecast regarding the state of the property market. In the year 2020, Musk made the announcement that he was going to sell his housing belongings, and he did so by putting his California mansions up for sale on the American housing database Zillow. Tesla CEO Elon Musk has listed 4 of his Los Angeles residences on the database, asking for a total of $97 million. Although he claims that he did this to avoid the burden of material goods, most of his skeptics perceive it as an attempt to get out of the shaky US property market as early as possible. I think possessions kind of weigh you down, and they're kind of an attack vector. You know, people say, "Hey billionaire, you got all this stuff." Like, well, now I don't have stuff now, what are you going to do? Does it really make sense for me to spend time designing and building a house? And I'd be real OCD on the little details in the design, or should I be allocating that time to get us to Mars? I should probably do the latter. So you know, like what's more important, Mars or a house? I'm like, Mars. Musk said on the Joe Rogan show on the same year. On the other hand, the vast majority of individuals observed that Musk was actually timing the property market. Since May and June are the best months to sell a home in the United States, he put his properties on the market right before that time. However, when COVID decimated the economy in 2020, it became even more imperative for Musk to dispose of his homes prior to the anticipated decrease in the remainder of the year. Even if home prices have recovered from the epidemic, there is the possibility for them to decline in some markets. Regrettably, the Federal Reserve has decided to hike interest rates with the intention of combating inflation in the economy. Because of this, mortgage rates have increased, making it far more challenging for individuals who are purchasing their first home. Because of the high interest rates, the average American household has to spend 34% of their monthly income to keep up with their mortgage payments. Because of this, some experts on Wall Street fear that a housing crisis is on the horizon, although it is possible that it might not be as catastrophic as the one that occurred in 2008. As opposed to this view, financial expert Robert Heck, who is also Moody's vice president of mortgages, claims, supply versus demand is significantly different than in the 2000s leading up to the housing crisis. Inventory still remains low due to supply chain issues and demand persists with 5% mortgage rates. As long as inventory is low and total units remain near current levels, home prices should remain stable. Intriguingly, all of these experts concur on one point, namely that today's purchasers are less susceptible to risk. It was determined that 75% of buyers had super prime FICO scores of 720 or higher when Bank of America experts looked at the credit scores of home buyers in 2022. In the years leading up to the housing collapse of 2008, only 25% of buyers had equivalent credit scores. On the other hand, the Bank of America noted that the quality of existing mortgage debt is excellent. Buyers now are less exposed in the event of an economic downturn, and the riskiest buyers aren't in the marketplace. In addition, the ratio of house debt to disposable income has decreased by more than 30% compared to 2007 and 2008 during the height of the global economic meltdown. As the housing market bubbled, household mortgage debt skyrocketed, rising from 70% to 100% of households' disposable income. Predatory lending was a contributing factor. After the pandemic, household debt remained nearly the same at around 65% of disposable income. Bank of America has also remarked that the prevalence of dangerous adjustable rate mortgages has decreased from their pre-2008 levels. In contrast to 2006, when they accounted for an alarming 21%, they now account for barely 2%. Because of this, the number of households affected by rising interest rates has decreased significantly. Additionally, BOA stated that these mortgages were the primary element of predatory lending throughout the housing crisis, which inevitably contributed to the market collapse. Home building is still highly cyclical, but the industry has changed for the better since the housing bubble, and we see many reasons that this cycle will not end in a crash, said BOA in its final statement on the looming housing slump. An unusual perspective on the looming housing catastrophe came from one Yahoo user though. Simply because this user's words were so well expressed, we felt compelled to call attention to them. The upcoming collapse is going to be far, far worse than 2008. Here's why. Back in 2005 to 2007, house prices increased, buoyed by individuals and families buy more houses than they could afford with creative financing products. However, by and large, these houses were purchased to live in. Now, it is true that mortgage underwriting standards are very strict, which means that most people are simply priced out in today's market. However, the lion's share of homes being sold today is being purchased by investors, hedge funds, and corporate entities who are not planning to live in them. Unfortunately, local incomes do not support the rents which must be charged to profitably rent these homes out, which means that eventually the investor owners will hit a wall. They overpaid, and although the purchase price was cashed to the seller, these companies are heavily leveraged. Current market pricing is a feedback loop. Excessive investor purchases creates a shortage which drives up prices further. This will ultimately collapse. It's a fascinating perspective, to be sure. This is a fact we can't ignore, regardless of whether you agree with Elon Musk's prediction of a coming housing crisis. For the time being, our only option is to observe the situation as it unfolds. Do you guys agree with Elon Musk's perspective? Do you think an economic downturn will play out, or will it be just a minor correction? Share your thoughts in the comments section down below. If you enjoyed this video, please like and subscribe, and we'll see you on the next one.